Good morning, everybody. Let's get some charts up here. All right. So recovery yesterday after the gap down. And so the question becomes, is it a dead cat bounce? How much is this something to be concerned about as far as to break the uptrend? And we really don't know yet. I'm thinking today potentially is going to be range bound. And so we see the gap down was yesterday. We were looking at a big open interest at 4,300, and we talked about this shelf of support, and it stopped exactly there. And then it came up, and for gaps, I explained in the green room yesterday that as prices come up off of the low, you look directly to the left for a pivot or an area of congestion as to where the target area potentially may be. The first one, we don't look at the gap fill and as a starting point. We always look at what's to the left, and it's going to be whatever point it went through. So as you can see here, duplicate that and see this one here, it gapped down through it. So that just sliced right through that. And so as it bottomed and came up, hit that one and backed off, and kind of things just went nowhere. I remember in the afternoon, we were thinking, were we going to get a 15-minute buy setup? Would it be a buy setup failure? And it just did nothing. And then it jiggled down and jiggled up. And so now it's opening up. SPX is opening up. I guess it's about there where I moved that line from the other line, actually. It doesn't matter what color it is. It's opening up based on where the spiders are, about there. So it's gapping up into these overlapping bars right there. And there's really not much of anything to the left where those bars overlapped, as they came down and went straight back up again. So the congestion is over here, actually. That's going to move with that. Yeah, right around there. So since it's gapping that far and it's got the prior high right there, it's impressive that if it can get all the way back up there again, then of course the question becomes, can it stay there after gapping and hitting that area? Does it roll back? So in any event, if it should go through the high, since it's gapping and going, I suspect it's not going to go that far, and it may just come back in. And now this has created a shelf of support, which leads me to thinking range bound today. So we'll see. And as we always do, if it gets up there and it goes sideways for a half hour, an hour, or whatever, and it hangs there and we see bottoming tail bars within the base, well, that's going to be bullish. Right? So I guess 43.40, 43.40. Yeah, give or take is where it's at. So the spiders are in the middle of the green bar, which we'll get to. So where does that leave SPX spreads today? I think it's going to, I think you have to be willing to get relatively close to the danger, because to get above this area, 43.70, there's some premium, but you got to be like right there. I'm not comfortable with that. So I need to see something fail or something happen up here, not just moving up here, because 43.70 is too close. And, what if it just keeps going and down below? Be great. I think there's a little bit of premium at 43.80. So if it does poke up there probably won't be if it continues higher. So I'm not interested in anything in here. If you are, well, there's going to be some premium under here if you're willing to, have a bias that it's not going to go under there. And that may be the case since it's gapping up and going. That may be the case. That's a personal choice, not necessarily a right or wrong. So you do have some support area there. So if you think 4,300 will hold, since you got this low here, and thinking about, okay, range bound, if you take some heat on it, I'll personally be a spectator. All right. So spiders, I said they're at 433 in the middle of the green bar. Same story. I think this should be significant support today on any retest if it goes down there. And up above here, I think is going to be a little more difficult to get through, today. But again, we'll see, like we always do. So far, things are holding up relatively well. John saying, feels like someone didn't want the market to keep tanking yesterday. Well, this market is definitely what I've called schizophrenic. Just looking at the technicals and forgetting about, I guess, the news, that the gap down, prices came to support, there's going to be buyers, and it rallied up from there. So technically, it did what the charts suggested was possible. It didn't regain the whole move. Right? It only got up to the first resistance area, which is okay. It was good that it got off of the low, but it didn't get deeply into any significant resistance. But now it's gapping up here. So, yeah. I mean, again, range bound. If it chops around here, let's say we're going into next week, just forgetting about the weekend type of thing. This type of a pattern was the gap down was bought. And so now we've got this overhead resistance. There is that shock element to what happened. If this goes sideways in this area for a few days, well, the trend is up. If it doesn't break below here, I'll just apply bar by bar analysis and you'll know exactly what's going on. Right? That's the easiest way for everyone to know on their own. Bar by bar analysis, look to the left, a little bit of common sense goes a long way. You put a lot of squiggly lines under here, clouds, and so on and so forth. Things get pretty clouded pretty quickly. Just take a look at the VIX for a second. We don't look at the VIX too much. Right? Spiked up, got up to the pivot high, and well, it's backed off here, range bound. Just wonder what that would suggest. Diamonds, that came down pretty hard on the futures, and it hit support and went back up, and now running in place. Qs, the strong uptrend into the gap fill, went up, hit resistance, just kind of died there, and 359, almost 360. Not really a big deal, not impressive, and just trading, chopping around here for the moment. So wait and see how that develops. And Russell was the strongest. Well, it came down the worst. Yesterday I said this is a setup of a novice gap. And I explained it was going down several days. It gaps below this low. It hits this area. And this led the way up. It filled the gap and then began to back off. So still in a downtrend. Stabilized after this breakdown. We'll see what happens. So in the same way, if we see the S&Ps go sideways up at the highs being bullish, if they're doing that and this cannot lift off of here and this goes sideways down here at support, well, then we wait to see, does it break down? But if it has an inability to go up, and notice the angle of this retracement coming straight down again, that's bearish. Remember, we wanted to see this stay up here from a bullish point of view, and it didn't do that. It went down. Yeah, just skipping around here a little bit. We've been talking about Bitcoin. of going sideways after breaking lower here. And it came up, it attempted to go up, it came down. It's just flipping back and forth here, back and forth here. And, showing a little bit of lift off here, but no big deal within the context of all of this. So we'll see, from a longer point of view, what I explained and what we talked about in MT Live was, can it make a big green bar or a big red bar, which would be a very clear signal, if it was a big green bar, it's going up, and vice versa if it's a big red one going down. And yields are up here a little bit, right? But just a little bit of a mini climactic, unless this can turn into a bottoming tail bar this week. This is rolled over, it's broken, it tried to hold here. And the idea here is just factory work. Where's the next support level? As things move down and create voids, they can bounce back up again, which gives sellers an opportunity to sell again. Now, our objective management and concepts of MTS say, okay, it's in a downtrend. Yes, there'll be sellers here. It should go lower to the next support. However, the retracement concept says, if this can retrace all the way back up here and close up there, you need to make a shift in your bias. More common sense. And we'll see what that does. Now, the 5-year came all the way back down, hit support. Right? Even for these yields, it doesn't matter whether it's bonds, corn, Apple, just up, down, or sideways, and look to the left. It came all the way down. So it kind of neutralized the tightening yield curve concern that developed when that spiked back up again by coming all the way back down. So we'll keep an eye to see, does this go down or is it move back up step by step? The more things go sideways, the more it's like, well, what if, this and that, because you don't have clear uptrends or downtrends in multiple time frames. Other futures, Qs, uptrend, came down, right? Really not a big deal. It's in an uptrend, no violation. Came in a little hard. Let's see what it does. Another chart that more supportive of a bias of running in place today. Let's go to this one. Is it cleaner? Yeah, it's cleaner. Current contract. And so was going sideways. Same story as, looking at the ETF. It broke down. It's retracing back up again, moving up there. And, we've just got a giant trading range going on here, looking at the weekly chart. Right? If it can close, back up into the middle of the range, yesterday, the move down here, just it doesn't look so bad. Just looks like more of a sideways mess. And oil, that came down back up again. I think more range bound market for now. Gold looks like maybe the breakdown bar failure noted last week. It stalled, obviously. It got rejected when it took out the high. So, that as well isn't going to be going much of anywhere for the moment. And silver really kind of underperformed, which before it was, back here, it was outperforming. So smaller range bound, as everywhere we look, it certainly points us to not having much of an expectation for big moves today. Now, this didn't recover yesterday. So we've got all of this information that's like, hey, nasty gap down. After going sideways for about an hour or so, market rallies up into an area that more neutral, was a decent ability to get off of the low, right? So not as bearish as it could have been. Now the gap up goes even further. right? Which is okay, range bound, but where do we go from here? And then we've got things like, the transports, which were bearish and kind of this bear flag pattern. That kind of actually is, right? This upward sloping higher pivot high and higher pivot low, and then it breaks down again. And in part, that was, the news about the rails, where it had broken out the day before yesterday. And there's more news today about this administration trying to, go after big business, which is, hey, I guess they didn't give them enough money. It's like a mafia. They keep coming back for more. And so you got this nasty break, and you got, generally looking at airlines, the ETF, gap down below the 200 and did recover, but the transports looking as they do and yields pointing down, none of that suggests that this economy is going to be so wonderful. So growth stocks leading the way up or leading the way to hell? I don't know. We'll see. We'll follow the trends in multiple timeframes and see how it all evolves. Actually, Ken, yes. And if you actually look at the spot price of lumber, it topped out close to 1,700. And as of yesterday, it was down close to 700. So it has gotten crushed over the last couple of months. And copper, you can look at COPX. And, that's broken down. So you got all of these things that are saying that, point to historically a weakening economy. Now, how much influence did this coronavirus debacle, which was a crash and immediately turned and went up, which said, hey, excuse my language, but seems like this was bullshit. Otherwise, why would it have rallied like it did? Well, you need to get this virus vaccine and people are dying, which I know people did, but it wasn't what it was, out there sold as. Anyway, so now all of this potential supply would have been normalized, would be normal without that situation. All of the supply contracted. As far as, go try and, as I said, buy a 2x4, go try and buy a 9mm bullet, go try and buy a piece of furniture or whatever. And so, all of that supply got contracted. It drove prices up. Now supply is being built back up again for this normalization. And, all of this pullback that we're seeing in wood and so on and so forth could be that, the demand is like, hey, prices are dropping. Why should I pay X when I think it's going to keep coming down? So I don't know. It's crazy times. It really is. And so we just have to see how it shakes out in the coming weeks. Because this is I don't know if it's the new normal or it's just the momentary wacko situation that's just continuing. All yours, Dan.
Oh, you're going to leave it on me on the term wacko. Thanks.
Well, do your best with it.
All right. So we have light inventory. Let's see. We have a call spread on Dash that expires today. That looks fine. We have one on Deer next week. That's gapping up with the industrials. So, it's over this green bar. So hopefully it'll stall right here. Into the close yesterday, I like Tesla, the best for a put spread for a 0 DTE. So let's keep an eye on that. I also liked Boeing reversal yesterday. Look at that pop into the close. So both of those are still looking good if we can get some juice. The other things are taking a breather. along with the Qs. So, I think we're range bound too. Some gappers here. MITQ went public yesterday. Had a nice close, nice fat real body, and now it's strong again. FPAC here. This is a new Bitcoin. I don't know if it's an exchange or a broker or whatever. I didn't follow it, but it's a SPAC that's going public today. ALF. ALF. It's a bullish pre-market, bullish consolidation at resistance. So this would be a 30-minute high candidate for a day trade. Levi here, bottom right screen, had earnings. Bullish gap up from a reverse head and shoulders. But my target, my target's 30 to 31, and it's already 29.30. So the risk to reward there, not crazy about. Away. I just saw them talking about this. This is an ETF. Travel related, getting away. And this kind of looks like our cruise ships and the reopening thing got spooked with the Delta 3 variants or whatever. But that's another ETF. No interest in that. HGen 1872, bullish gap up to resistance. Stamp, yeah, that's a monster gap, but I heard they were taking it private. That's why. Another IPO yesterday, gapping up. Wow, look at that gap up percent. Wow, I had nothing to do with that. IMOS looks like an ADR. No interest, gapping down. DCT. Did I lose my pre-market? No, can't tell where it's gapping, but it shows it down 71 cents, but I see no pattern there. Matex, I think it had earnings, but I got to wait for a print. I see one print up here, 42 bucks, but I don't trust pre-market prints that are not liquid. Costco was not earnings, but it was same store sales or something like that, some type of reporting. And this we actually bought the stock on this breakout June 22nd. And then it was a 1, 2, 3, and then a continuation pattern, and the last 2 days relative strength. That thing's been a tank, but no great pattern now. Cars, I missed this gap yesterday, or maybe I didn't, and maybe I said you know what? Maybe I probably said the gap's too big for me, and that was an example where look, pre-market, it broke down. 15-minute bar, closed, breakout. That was your entry. 15-minute high, stop, 15-minute low. That's a beautiful. Let's say I do all the time say gaps are too big. I mean, look, it closed at 10 and it's opening up at 17. So it was huge. But this, yeah, that's a great picture of, I know it's extended, but it's going to get more extended. And there was an article in today's journal actually about this that said the Reddit boys, this was their toy yesterday. So I wish we knew that. Had I known this was their toy with this 15-minute chart, without a doubt I would have given it, because when we combine their ability to go after the short squeezes using our technical approach. PDD was a pre-market, now 109.60, so it's a dollar gap, but it's, you just be trading a small bounce back up. That's a nasty downtrend, nasty weekly, monthly break also. Carvana, we found this into the close yesterday. Just amazing strength. You know, this, go back to the Corona. No, it's the weekly. Look at this crazy run. Look at this, $21 to 322. Is that insane? But then I said into the close, and it looks higher. And there it is, gapping up $2.48. All right, Boeing, we talked about, put spread idea. Beautiful, beautiful bar here. If we get this inside bar, which as of right now, it's setting up for that, that will be a marvelous 1, 2, 3 for Monday. Wide range igniting. Look at this little bottoming tail, right? That small bottoming tail is a breakdown failure. And then just slicing through 2 weeks of resistance and a closing breakout with a price void. Oh, it's great. I'm gonna put him right here actually. CLWT. And yeah, when the bigger the bar like this is when I love 1, 2, 3s. Compare that to Costco. Costco, this was a closing breakout bar igniting with a bear sandwich. So this was one that you could buy over the high. Whereas, you know, I just showed you the other one. All right, DLR, this was a beautiful W bottom I've been watching for the last 2 days. I know it's up 3, 4 bars here. Yeah, kind of missed the ideal entry, but that was a beautiful W bottom. Wow, tick 1400. Wow. QFin, remember I was watching this one yesterday to see if it would bounce on the 200 here. It didn't make it. So that could be a day trade long idea, 5, 10, 15-minute high, whatever. Let's put it in a window and see what it does. Today, 0 DTE day, so let's obviously be on the lookout. I'm sorry, GME and AMC are always candidates because we can do naked. We can do naked and not worry about overnight gap risk. So AMC, I like that reversal. I have that in a window on my other computer, so let's watch that. Watch for a little pullback reversal. Let me see what the premiums are like right now. AMC, if we go, you know, 41s, I think would be fine. 17 cents is all. Wow. I remember the days where that would be 75 cents. UONE. Yeah, it was on my radar yesterday, but then the big old tail. I think it needs to calm down a little bit. Hey, Roger. All right, our dash. It said bid 20 cents for that. I really didn't mean to do that. I did. I got to make clear that if I'm going to take the overnight risk, then I may not want to close it at 20 cents because I'm not getting paid. I'm not getting paid for my overnight risk. Wow, these premiums are still jacked. The 185 is 27 by 84. Wow, the midpoint, not saying you'd get filled, is still 47 cents. That's crazy. All right, Levi, bottom right's coming in. Q's neutral, spiders, more bullish. Beautiful gap, beautiful pre-market. 10-minute high. I mean, the target's not real big today for obvious reasons, but that's a beautiful pre-market. And, opening 3 minutes so far. Diamonds, they're at resistance, so I'm not crazy about that one. 9WM is a mess. So if the markets do give us a bullish bias, not a big target, and it's just a scalp. It would probably be the diamonds. Wayne gave us some nervousness yesterday. Looking a little better now. Riot, Mara, still a mess. DLR, W bottom. Boeing, Boeing, if they were to close here, I wouldn't mind a put spread for next week. That is a powerful reversal yesterday. Jets here bouncing a little, the downtrend. I see the oil ETFs coming in. XHB trading range. XLP trying to break out. All right, retail. That's a nice gap in retail today. SLQT, let's stop the base highs, 1773.